Palantir isn't just playing in the AI space anymore, it's going all in. Over the past year, the company has aggressively expanded its artificial intelligence platform, AIP, landing deals with governments, enterprises, and even cutting-edge aviation firms. But the real question is, will these AI ambitions actually translate into revenue growth and a higher stock price? Palantir's stock has taken a beating recently, dropping more than 30% from its peak, and investors are getting impatient. AI might be the future, but if these new deals don't start delivering results soon, Palantir's stock could keep sliding. And later in this video, we're going to cover one of the biggest AI battles happening right now, Palantir versus Nvidia. If you think Palantir is leading the AI revolution, wait until you see how it stacks up against one of the biggest names in the industry. And there's one major update from Wall Street that could make or break Palantir stock. Before we get into it, make sure to subscribe. This is going to be an eye-opening breakdown of where Palantir's AI future is really headed. So Palantir's AIP has been widely praised, but the company needs to prove it can scale beyond government contracts and bring in more enterprise customers. Enterprise adoption is key to Palantir's long-term valuation. Right now, government contracts make up over 50% of Palantir's revenue, but investors want to see a more diverse customer base. AIPCon gave us the first real look at how successful Palantir has been in expanding into the private sector. After 3 weeks of declines, Palantir's stock finally rebounded last week. AIPCon delivered some strong announcements, but we didn't see the recovery we wanted. Also, here's the catch. Just announcing new partnerships isn't enough. Investors want to see concrete details on revenue impact. If these new AI clients aren't spending big, the market isn't going to care. And speaking of AI, Palantir isn't the only company making big moves. It's also up against some serious competition, and one name in particular, Nvidia, is proving to be one of its biggest challengers. Palantir isn't just making AI deals, it's positioning itself at the center of some of the biggest technological advancements happening right now. And its latest partnerships could give it an edge in AI-powered industries that most companies haven't even started to touch yet. One of the most interesting collaborations? Palantir's deal with Archer Aviation, a company working on next-gen aviation technologies, including electric air taxis. This is a huge deal because it expands Palantir's AI footprint beyond defense and traditional enterprise applications. With this partnership, Palantir is helping Archer build an AI-powered aviation system, handling everything from flight data analytics to predictive maintenance and operational logistics. And then there's the R1 partnership, another AI-driven deal that focuses on AI-powered data analytics. This collaboration shows how Palantir is moving deeper into the commercial AI space, helping companies make sense of massive data sets in ways that weren't possible before. But here's the big question. Are these partnerships enough to drive real growth? Right now, Nvidia is dominating the AI space, landing huge contracts with government agencies and private companies. And in a recent Forbes analysis, Palantir was put head-to-head against Nvidia as an AI investment. The core difference? Nvidia owns the AI hardware market, while Palantir is focused on AI software and applications. Nvidia's AI chips are powering the entire AI industry, from data centers to autonomous driving. Palantir's AI models take that raw computing power and turn it into actionable intelligence for enterprises and governments. But here's where it gets interesting. Palantir is trying to do something Nvidia isn't. Instead of just selling AI tools, it's integrating AI directly into business operations. That means companies don't just get AI models, they get custom-built AI systems that automate real-world decision-making. So the real question is, does Palantir's approach give it an edge, or is Nvidia still the better AI bet? Right now, Nvidia has the upper hand in scale and market dominance. But if Palantir keeps landing high-profile AI partnerships, it could carve out a niche as the go-to AI platform for industries that need real-time intelligence, not just raw computing power. That brings us to the biggest question investors are asking. Will Palantir's AI expansion be enough to push the stock higher? Let's break that down next. For all the excitement around Palantir's AI expansion, the real question that matters is whether these moves will actually translate into revenue growth and a higher stock price. Because at the end of the day, partnerships and announcements mean nothing if they don't show up in the company's financials. Right now, analysts are divided on whether Palantir's AI moat is strong enough to make it a dominant force in the AI space. Some believe Palantir is on the verge of becoming one of the most important AI software companies in the world. Others say it's still too dependent on government contracts and hasn't proven it can scale commercially the way Nvidia and other AI giants have. Take a look at some recent price targets and analyst opinions. Zacks Investment Research recently highlighted that Palantir's 31% stock decline over the past month has created a buying opportunity for long-term investors, especially if its AI deals start generating meaningful revenue. And now, coming to Wall Street's big warning. Here it is. Jefferies, one of the most well-known and prominent names in the world of stocks, remains bearish, arguing that Palantir's stock is still overvalued, and they're thinking that even after the recent drop, the firm maintains an underperform rating with a $60 price target, suggesting there could still be downside. Yes, they're implying potential downside of 29% from the current share price. Also, out of 26 analysts who cover the stock on Wall Street, only 8 rate the stock a buy. What's also really concerning is that Palantir is trading at a price-to-sales multiple of 71, while trading at 441 times earnings and 180 times free cash flow. Those multiples imply mammoth growth expectations that may prove difficult to justify. But still, consensus analysts predict Palantir's revenue will grow 32% this year, reaching $3.77 billion, slightly exceeding the company's own projections. If Palantir sustains this 32% annualized growth rate, it would take about 5 years for its price-to-sales ratio to decline to 17, which is considered typical for a rapidly expanding software firm today. Other analysts believe Palantir's AI strategy is too niche and not as scalable as Nvidia's approach, meaning it could struggle to compete in the broader AI market. But here's the key point. Palantir doesn't need to compete directly with Nvidia to succeed. Unlike Nvidia, which dominates AI hardware, Palantir is building an AI ecosystem that's focused on decision-making and operational intelligence. If it can prove that its AI software is essential for governments, enterprises, and industries like aviation, defense, and finance, then it won't matter what Nvidia is doing. And that's exactly why Palantir's new AI defense proposal in Japan is catching serious attention. In a recent statement, CEO Alex Karp suggested that Japan should develop an AI-powered defense targeting system with the US, citing the increasing need for automated intelligence in military strategy. If this kind of deal moves forward, it could further cement Palantir's dominance in AI-driven military applications. But more importantly, it would show that governments worldwide see Palantir as a critical AI partner, reinforcing its long-term relevance and revenue stability. And then there's the issue of insider selling. Investors have started questioning whether Palantir executives really believe in the stock's future, given the large-scale stock sales by insiders. Over $328 million worth of Palantir stock has been sold by executives recently, sparking concerns that even company leadership might think the stock is overvalued. So is Palantir's AI expansion enough to push the stock higher? The answer likely depends on whether it can prove that AIP is a must-have technology for businesses and governments worldwide. If it can, then this recent stock dip might look like a huge buying opportunity in hindsight. But if growth doesn't materialize fast enough, analysts who are calling it overvalued might be right. Where do you think Palantir is headed? Is its AI strategy enough to make it a long-term winner, or does it still have too much to prove? Let me know in the comments. And if you enjoyed this breakdown, make sure to like and subscribe for more deep dives into AI stocks and market trends.